Hi, I'm Judy Karzud, and I'm part of NAIFA's government relations team here in Washington, D.C., and I have the privilege of moderating this panel of amazing NAIFA consultants. Scott Cinder has been working for NAIFA since his first day at a law firm, January 2nd, 1991. He is now a partner at Steptoe & Johnson in Washington, D.C., where he chairs the firm's government affairs and public policy practice group. Scott focuses on financial services issues, both in Congress and before pertinent federal regulators, including the Department of Labor, where we have been many, many times, and the Securities and Exchange Commission, where we've also been many, many times. Scott earned his bachelor's, Master of Public Policy and Law degrees from the University of Michigan. Pat Raffanello has been part of NAIFA team since 2008. Together with his colleague, Tim Hanford, Raffanello and Associates provides clients with substantive expertise in taxation and the legislative and regulatory processes. Pat has developed a deep and long-standing relationships of trust and respect with Republican Senate and House leaders and with members of the committees of Finance and Ways and Means and their staff. Recognizing that while being correct on policy is essential, it is not necessarily sufficient, so Pat is deeply involved in supporting the political campaigns of members of Congress. He's very well connected, I can attest to that. And Danny Kehoe, last but certainly not least, an attorney in Washington, D.C., has been representing NAIFA for more than 30 years. She specializes in tax policy, working with Congress and federal agencies on legislative proposals, on tax rules governing life and health insurance, retirement savings, and employer-provided benefits. She also is very well connected, and I can attest to that. She earned her law degree from Georgetown University and her undergraduate degree in journalism from the University of Illinois. Thank you all for the work that you have done for NAIFA over such a long time and the many, many successes that you have had. And thank you for being here today. This legislative panel has been a highlight of both Congressional Conference and our P+P conference, and we're so pleased that we can make this happen virtually this year. This panel often talks about policy, politics, and process, and this year, wow, do we have a lot of plates spinning in those areas. There are incredibly narrow majorities in the House and the Senate, some hard feelings following the events of January 6th, really more polarization than most of us could ever remember. And there are significant legislative proposals coming from the White House and from Congress. So let's start with some process considerations, and then please talk about what is being proposed, what you're hearing, and if you brought your crystal balls, what is doable. Scott, can you lead us off on process?
Absolutely. Hello, everybody. Pleasure to be with you. As Judy mentioned, the margins are historically tight. Even though Democrats control each of the key chambers in the White House, it's a dead even tie in the Senate, 50-50. And in the House, there's, I think Speaker Pelosi has a 4-vote margin right now. Incredibly tight. It's incredibly polarized. We're experiencing another round of the January 6th issue right now as they're debating whether or not to establish a commission to evaluate it. And everything is just full of partisan tumult. The interesting thing about it, from my vantage point in terms of process, is normally the House operates like a parliament, simple majority rules. Even there, with that 4-vote majority, Speaker Pelosi has a very tight path to navigate. She was able to do it on the January 6th commission. In the Senate, though, historically, we have the filibuster rule. For most issues, it takes 60 votes to get something past the finish line. And there's a couple things I think are worth pointing out on that. First of all, there was a lot of discussion about whether or not the Democrats would toss the filibuster rule. It's been eroded over the last 15 years or so, so it no longer applies to confirmation processes, but it still applies in the legislative space for policymaking and budget making. There are a couple key Democratic senators who've drawn a line in the sand, at least to date, and said they will not support removing the filibuster rule, meaning that that 60-vote threshold remains. Those senators, they've been pretty staunch in sticking to that position. and it doesn't look like they're moving off it anytime soon. Ironically, to get rid of the 60 vote piece, you could have a simple 50-50 tie vote in the Senate, and the vice president would break the vote as the overseer of the Senate, because to change the rules, you only need that 51 votes, but they don't have them. So that means on most things, you need that 60 votes. The big exception is reconciliation. And some of you have heard a lot about this. It's somewhat confusing, but for reconciliation bills, and I'll kind of unpack it, but the magic of reconciliation is anything that is within that framework. You're back to the simple majority rules, even in the Senate. Under the applicable rules, to be a reconciliation bill, it's got to have budget impact, direct budget impact. So every provision that's included in the bill must have a direct budget impact, plus or minus, in order to be included in that bill. This was an invention of former Senator Byrd from West Virginia. And before a reconciliation bill can go to the Senate floor, it goes through something called a Byrd bath, where they evaluate every one of those provisions to evaluate whether or not they qualify under those rules. Right now, the only real legislative game in town appears to be reconciliation. Now, we're going to talk in a minute, I think, more about the infrastructure debates that are going on, which are half in that debate and half out. But as a general matter, that's our frame. There has been an interesting development. Normally, you can do only one reconciliation bill per year, and it's in conjunction with the budget. Occasionally, you can do two in a year. We saw that during the first year of President Trump's term, because you're doing one budget bill for the prior year and one for the current year, because one wasn't done. And that was going to be the case this year too. But Majority Leader Senator Schumer in the Senate, he was able to persuade the parliamentarian that you can actually repeatedly amend the reconciliation bills that have already been done, which theoretically leads to an unlimited number of reconciliation bills, provided that each of the provisions in each of the bills can survive the Byrd bath. What does that mean? I think that what it primarily is going to mean is that almost all legislative activity that we see that has any chance of actually passing the enactment threshold, at least as it affects our space, is going to be done through reconciliation. Let's bracket the infrastructure thing, and I'll kick it over to Pat and Danny to start to opine on that, which means you're looking at tax provisions and spending provisions, direct tax, direct spending. So there could be a lot of impact in our space still, right? We're very impacted by the tax stuff. But on non-tax related issues, things like the PRO Act, which would drive labor treatment, I think that by virtue of keeping the filibuster and having the multiple reconciliation bills, it's much harder to see how something like that gets put into the final mix, because it's hard to say there's a direct budgetary impact on labor policy that gives individuals organizing rights or what have you. But the immediate issue before us, I think, is infrastructure. So why don't I kick it over to Pat and Danny, and they can start to opine about the tax implications of that, and we can start to communally speculate on what we think the chances are of getting something over the finish line.
Yeah, and let me jump in here for a second and say there's going to be a lot of speculating here, and a lot will change but tomorrow and next week. So we'll caveat that, and then Danny and Pat, go for it.
No, it's no speculation. We know what's going to happen. Just don't take any notes on any of my predictions, because I don't. I'm going to make a lot of predictions. One or two may come out true, so I'll be right. That's kind of the way we do it.
So Pat, just to comment, we are being recorded, and so we don't have to take notes.
Right, we can hold them to it this time.
I hadn't thought about that. You must be a detective. But let me, before we go to the infrastructure discussion, let me just follow up a couple of things that Scott said. It was a really good description of where we are, but, with a 50-50 Senate and a, 3 or 4, whatever vote margin in the House, it's pretty much even. The difference is in the House, the rules are designed to accommodate the will of the majority, so they can pass anything that they can get that is within the Democratic members' agreement. They don't have to worry about the Republican votes. In the Senate, the rules are designed to protect the rights of the minority, which gives great power to each individual senator, who could then force any vote to go to, almost any vote to go to a 60-vote margin. And that means getting 10 Republicans, provided you keep all 50 of the Democrats, well, 48 Democrats, a socialist and an independent, or whatever he calls himself, to stick together. Then you have to get 10 Republican votes, which is not going to be easy on anything that is not broadly bipartisan. And so far, there's been little discussion of anything that is broadly bipartisan, except maybe what's on the floor this week and next week related to China. You know, there's a bill called the Endless Frontier Act, basically trying to put some guardrails to protect U.S. intellectual property, U.S. jobs from being stolen. You know, frankly, at least intellectual property being literally stolen from the United States by the Chinese. But I think.
Hey, Pat, can I jump in for just a sec here?
Certainly.
I think there might be one exception to everything you said, which I completely and totally agree with. So therefore, it must actually be correct. I think the retirement savings package, the Secure 2.0, Generation 2 retirement savings package, shows signs of being widely bipartisan. And the people on the Hill, at least, see a very good chance for enactment of that come fall. We probably won't see Senate action on it until after the August recess. I don't know when the House will vote on it, but Ways and Means Committee has already approved it. It's not a good choice for reconciliation because most of the 42 provisions in it are not budget impactful. But I do think that there are some exceptions to the 60 vote. It's not an exception to the 60 vote threshold because there'll be way more than 60 votes for it. But that's a very important issue to our people. So I thought it was probably worth interrupting you, and I apologize for that.
Yeah, exactly. It's the exception that proves the rule. And you know, the amount of work that you, Danny, and you, Scott, did, and Judy, and the whole NAFA team to get our provisions taken care of, NAFA provisions in that bill, was great, and we got a great success on that. And I'm told that the Senate Finance Committee plans to have hearings on that and start marking up perhaps in July. But getting back to the filibuster, you know, there was Republicans ran in the last election, in 2020, on trying to preserve the filibuster. The scare tactic was that Democrats will take over the Senate, they'll get rid of the filibuster, and they'll make the District of Columbia and Puerto Rico states, thereby adding 4 new senators. And I actually was with a chief of staff for a senior Democratic member of the Senate, and I asked him, well, why, if DC statehood, if the people of DC really need to have the vote, why don't you just do the easy thing and do a retrocession of parts of DC that came from Maryland in the first place? And without missing a beat, he said, of course, we want 4 new Democratic senators. So that was scary to the Republican base. Also said that if you get rid of the filibuster, Congress could add a number of justices to the Supreme Court, because the 9 justices we have, that number was picked by Congress close to 100 years ago, I think in the 1930s. And so
1880s.
Like I said, about the 1880s. Thank you, Scott. So, you know, that was I talked to a lot of Republican senators who were convinced that the Democrats would move quickly to get rid of the filibuster. And I'm not sure, I think they're wrong. I think the biggest obstacle to getting rid of the filibuster are the small states, the West Virginia, Arizona, Montana, Rhode Island. If the genius of the founding fathers was to have more representation in the House from the highly populous states, and equal representation in the Senate, regardless of the size. And for somebody, everybody here, I'm sure, has heard of Joe Manchin. If you hadn't heard of him before this year and you pay any attention to the news, he is like the kingmaker. He's, quote, the 50th vote for everything. And to put it bluntly, everybody's kissing his ass. The Republicans are being nice to him, trying to keep up with him. The Democrats are being nice to him. But then he has been foremost against speaking out publicly against getting rid of the filibuster. But Kristen Sinema, a relatively new senator from Arizona, has been as forceful, but not as much of a media hog in saying that she would not support getting rid of the filibuster because.
Let me just kind of one thing right there.
Please.
So Manchin's interesting, right? Because he said he won't get rid of the filibuster, but he may get rid of the filibuster for civil rights oriented rules. And you mentioned the justices. So theoretically, it doesn't have to be binary. It doesn't have to be keep it or get rid of it. Theoretically, you could start to see erosion in certain pockets. And we've already got some precedent on changing the rules related to nominations and in the judicial space. So, theoretically, you could see movement, particularly if we find ourselves in a real logjam in ways that offend Senator Manchin or Senator Sinema. That's all I wanted to say.
I think that's exactly true. You can't, I would never say that members of Congress are dishonest, but they change their mind. Circumstances change. And as Senator Manchin earlier this year in the COVID relief bill that President Biden sent out or proposed, he said he would not support that bill unless it had Republican input and they worked together. Well, as it turned out, they passed it with just Democratic votes, but Manchin actually saw him on Meet the Press. And afterwards he said, well, no, the Republicans had input. They had input through me, So I think he will hold firm just because it makes him so important. But I think it's time for me to shut up for just a little bit. I know it's hard. I like a spotlight and a microphone. But Danny, why don't you give us some insight, please?
All right. Well, I'm going to flip us off of process because who knows what our dearly beloveds up in the hallowed halls will ultimately wind up doing. Like Pat said, it is very dependent on the issue of the day and the politics surrounding the issue of the day. But I'm a tax geek, so I would like to get into what looks to me like one of the more challenging tax risk agendas that I've seen in a very long time. The proposals that are coming out from the White House, we know already. We don't have technical details because it's just white paper format. It's not in legislative language. But we know that the president wants to increase the corporate tax rate to 28%. We know he wants to tax capital gains at the same rate as the top personal income tax rate, which would be 39.6%. People think that there is an element to his call for repeal and step up in basis in the estate planning arena that would include making transfers at death a taxable event. That is not stated specifically in his proposal. And talking to the people at Finance Committee and Ways and Means Committee, you hear a lot of the tax geeky kind of conversation talking about how if you don't make a transfer at death taxable, you lose a lot of the revenue you get from going from step up carryover basis, but the politics of it are such that that may not happen. There's a paid leave, a national paid leave program that could have substantial impact on employer-provided disability programs. There are just an enormous number of things that are very risky. And Judy wanted us to take a guess at what could happen. My personal opinion is the vast majority of those things are going to wind up being in a reconciliation bill. That is, of course, assuming that they succeed in doing a bipartisan traditional infrastructure bill, which is a very big if. But I think corporate tax rate, individual tax rate, capital gains tax rate, estate tax, step up in basis are all very real possibilities for a reconciliation bill. And there, I think the challenge of getting a substantial number, basically all the Democrats to agree on any one package of proposals is going to be an even bigger challenge than trying to do something on a bipartisan basis. The people that I talk to, which tend to be, well, I talk to just about everybody on Capitol Hill, and there's a lot of skepticism about whether or not they can achieve that agreement. And that's particularly true because they're very, very, very concerned about the kind of input that you all are going to be providing, have already started providing, have already made an impact as these ideas develop. And so they're skeptical about whether or not a package can be enacted. At the same time, it's President Biden's #1 priority. And it is the Democratic caucus's #1 priority. So the most common thing you'll hear on Capitol Hill these days is there is absolutely no possible way that any kind of infrastructure bill, whether it's human infrastructure, traditional infrastructure, or both, can pass. And at the very same time, there's no possible way that such a proposal will not be enacted. So it's your original 50-50 Hobson's choice, could go either way, and your impact on the issues that matter to people who buy and sell and use life, health insurance, retirement savings, and employer-provided benefits is as outsized as the influence of Senator Manchin. Pat and Scott, would you agree with that?
I would agree with some of it. I think that the Biden administration has not put it out in writing, but I think it's pretty clear they expected that their proposal to revert to a $3.5 million unified credit and for estate tax was going to include getting rid of step up in basis. And, you know, if you remember, we have gotten rid of the step up in basis at one point in the 2001 Republican tax package that would have gotten rid of step up in basis. It would have eliminated that in 2010. And you may remember that 2010 was the year that George Steinbrenner chose to die because it was the year we had a 0 estate tax rate for that 1 year. I think they are, as you point out, they are running into significant opposition and concern from both Democratic members and Republican members on the making a death a realization event for capital. And if you actually took the president's proposal to increase the individual rate to 43%, to increase the individual tax rate to 39.6, and then you add the Obamacare kicker, you know, you're at 43.6%. And then if you go to a similar 43% rate for capital gains, and you don't have step up in basis, but you have realization, you can easily see the federal government claiming something like 60 or 70% of your capital gains at death, not to mention what the states would do.
And really there is, in the conversations where I've been in meetings with members of Congress on the Democrat side, there is a lot of pressure, it seems like, to follow through on this sort of ideology of tax the rich or make sure the wealthy are paying their fair share in taxes. And so you have that mindset behind these proposals. And as Scott said, if they're drafted in a way that they make that birdbath, there are some threats here, because there's a lot of pressure coming from the far left on doing something because of the perception that the mega wealthy are not paying their fair share. So,
and Congress being Congress, they're not going to be satisfied with just saying yes or no or tweaking President Biden's proposal. A lot of the members of Congress, particularly those on the tax writing committees, are having their own suggestions on things to do. You've got Senator Sanders and Senator Warren projecting $3 trillion could be raised from a wealth tax, which would be an extra income tax surcharge on
annually.
It wouldn't be an income tax, right, Danny? It'd be an assets tax.
All right. You got financial transaction tax proposals, which would add somewhere between 5 and 10 basis points to every trade of every security, derivative, etc. Unclear whether that would be assessed at the level of the manufacturer of the product or if it would be at the level of the person who owns the product. But it is a very substantial potential revenue raiser. And you've also got some pretty key people who are looking really, really hard at what we call a mark-to-market approach, where you tax annual gains in your investment, even if you haven't sold them. So if you have $100 in a mutual fund and it's worth $105 at the end of the year, but you're not taking any money out of it, under this kind of a proposal, they would wind up taxing that $5 gain. That would be pretty massive, and it could conceivably impact permanent life insurance, because there are annual cash value gains in permanent life insurance. And so under the rule as they're looking at it, that could mean a tax on inside buildup. Now, don't get overly scared. Be alert and be aware and be involved, and talk to your members of Congress, but nobody's talking about taxing inside buildup. And when you point out that an annual tax on gains of investment, even if they're not realized, could result in some unintended consequences, they start thinking about exceptions, et cetera, and so on. And they're also very quick to point out that one of the sort of ground rules of all of this, as articulated by President Biden, is that no new tax increase will fall on anybody who earns less than $400,000 a year. So what the proposal looks like is going to make a very big difference in terms of the risk it poses to us. But right now, it's certainly not a comfortable spot to be in. The kinds of things that they're talking about have the potential to be, as Judy likes to phrase it, really, really ugly. Scott, your turn.
I don't know that I have much to add. I mean, there's so much at play on the tax side. The margins are so close. You envision them getting something done, although it's hard for me to imagine what it will be. But I think because of that, it's all the more critical for us to be vigilant in our advocacy effort, right, to explain the impact of these things on us and our clients.
Yeah, so let me piggyback on that, because I think that NAFA members are the ones who can, as well as anybody, educate members of Congress and their staff on our products, on retirement savings, on how our products are built to provide guaranteed benefits far into the future, and that when you start ignoring how that pricing and the actuarial work is done on a premise that we're not going to allow deferrals, we're going to tax gains that aren't realized, kind of, crazy ideas, it's our members, NAPA members, that can explain that to members of Congress and avoid some of what Danny's calling now unintended consequences. So it's going to be critical to really work hard to develop relationships with your members and to have them know that they can rely on you to give a fair analysis of the impact of different proposals and an understanding of how this works for Main Street America and our clients.
Yeah, I'm not as comfortable as Danny and Scott are about how this will play out, because I'm always have great admiration for the Democrats' imagination in figuring out ways to take money from taxpayers. And so my advice is be afraid, be very afraid, go out and vote early and often. But, you know, in addition to what Danny's, that parade of horribles that Danny just laid out of potential tax increases, there's also one where the Democrats would like to say that for corporations, particularly publicly traded corporations, you would tax their income based on their book income as opposed to their tax income, which creates a problem because those are, you follow very different rules from the Financial Accounting Standards Board for your book income to what is your taxable and reportable income. But another area where the president is proposing to raise money, in particular for, as Danny talked about, they're trying to do on the real part of the infrastructure bill, not the fake infrastructure that they're making up here, is where there's a potential for a bipartisan deal. President has proposed, and Treasury released just today an official announcement on it, that if you give $80 billion over the next 10 years to the Internal Revenue Service, they will be able to return $700 billion, because the wealthy, according to their analysis, are paying only 45% or reporting only 45% of their income. And it really isn't true, or it's not really a hard number, it's an estimated number. To give you, it kind of moves around, because in testimony before the Senate Finance Committee, the commissioner of the IRS, Chuck Reddick, was asked what the tax gap is, and he had a really interesting answer. It's always been somewhere in the $300 to $400 billion range. And he said, it is, quote, "It is not outlandish to project that the tax gap is $1 trillion, end quote." When you start with it's not outlandish, then what is it? It kind of confused me. And I guess the idea of putting $80 billion into training and getting an army of IRS agents to go out and scour the countryside for money concerns me, because the estimates of the tax gap, the last time there was an actual analysis and a review done on this was 2013. And there was quite a bit of money that was being hidden overseas through either Swiss bank accounts, Cayman Islands, what have you. But Scott probably knows, is involved, I'm pretty sure, and pretty deeply in FACTA, the Foreign Assets Control Act. Was it Foreign Assets?
I think it's Tax Compliance Act.
Something like that, you know, and that basically since then has put reporting requirements on institutions overseas that want to do business in the United States. And a lot of that money that was hidden overseas has been either reported or returned. So,
Hey, Pat, can I ask a question on the first part of your comments there with what you are calling the infrastructure bill? Would Republicans be any more interested in in any of the provisions if it wasn't called an infrastructure bill? How much of this is just political? You can't have it because you want it to the Democrats, and how much of it is, heartfelt? That's a bad policy, because the polarization and the partisanship in all of this is, I think, getting in the way of some of it. And that's before we get to how to pay for things, but being sensitive to what the package is called seems childish.
Yes and no. On infrastructure, as it's been defined in the dictionary and in politics for decades, which is actually building stuff, Republicans want to do that. Now, they say they're not willing to pay more taxes for it. Both sides say the user fee, which is called a gas tax by some, which is actually a user fee, they're not going to touch that. What they don't agree, they say infrastructure is not giving money to pay for community college. It's not giving money for daycare. Now, those may be valuable programs, but that's not infrastructure. That should stand on its own, according to
Does
me.
it matter what it's called? That's my question. Sort of, does it matter
No,
if
it's
it's
just-
called
it's just-
infrastructure or not? There's some pretty good, social ideas in there that would put the United States a little more on par with other countries that seem to care about the humans that live there.
That's a different story than infrastructure. It really doesn't matter. If you're going to do an infrastructure bill, there are certain committees it goes to. If you're going to do human investments in human, in person, in people, they go to different committees. And
Judy, I think that this is your answer, right? For Republicans, infrastructure is going to be traditionally defined, and what they're willing to do is roads and bridges, maybe some rural access to broadband,
Yeah.
right? It's the traditional constructs. Whereas the Democrats are trying to broaden the concept, the human capital piece, and think of it in a broader way. I think if there's going to be a deal, it's going to be the McConnell frame, right? It's going to be less than $1 billion. It's going to be traditional infrastructure. It's going to be no tax increases. And it's all going to come back to Manchin. What's he willing to do? And is he willing at some point to say, we've talked enough, I'm voting for the Democratic bill now, or is he not? And only Joe Manchin, psychologist, knows.
He has said in public, though, that he's willing to raise the corporate income tax rate to 25%. Not willing to go to 28%, but he's willing to consider 25%.
So there you go. There's your cap right there. That
Yeah.
says King Manchin.
But I also think that if it starts to come together, and that is a very big if, you're going to find other senators who will also hold themselves out as the 50th vote. Once Manchin is on board, I can think of 4 or 5 right off the top of my head who will start saying, well, if you want my vote, you
Now
have
I'll be the stopper. Yeah.
Yeah, and it won't
I
be.
think we've got a bloodbath coming this summer and fall. And I think when we get to things like having to increase the debt limit, right now the debt limit is suspended until July 31st. As of August 1st, we are under a statutory cap on the amount of money the Treasury can borrow. And if that is not raised, then the US goes into at least partial default, which a lot of economists say is the same thing as full default, which is, in my mind and in the minds of a lot of economists, I'm well and thoroughly brainwashed on this, is an economic disaster that surpasses any economic disaster that I can think of otherwise. So we have that fight coming. We have the whole need to fund the government as of October 1st, or we have another government shutdown. So I think it all comes together sometime, probably on September, October. They'll do whatever they need to do to push off the decision date until we get to at least October 1st and maybe later than that. But it's going to get hot and hairy and humongous up on Capitol Hill then. And at that point, getting through to anyone who you're not married to, basically, is going to be impossible. So we right now have to build our defenses and, create a sense that it would be political disaster if they did the things that would be the most harmful to us. Things like taxing assets transferred at death, things like imposing a tax on investment gains that also hit permanent life insurance. I mean, the parade of horribles makes it more complicated because we don't know what they'll propose or how contained those proposals will be. But right now is the time to create those relationships and build those bridges and make it very clear that there will be, excuse my language, hell to pay if any of these really bad things happen, because at the time the decision is made to do or not do those things, there will be so many things in play that are disastrous and catastrophic in nature that it'll just be too late if we don't build our defenses right now. At least that's what I think. Scott and Pat can disagree with me if they want.
You're right. You're absolutely right. We have to avoid the temptation to just sit back and get some popcorn to watch the train wreck, because that train wreck is our country. And right now is the time to remind members of Congress, your state house, your governor, that we're watching, that your constituents, us as NAFA are your constituents. We're working with other constituents and bringing their attention to the fact that we are here providing the tools for individuals to provide for the financial security. It's really important that you as a NAFA member participate in the fly-ins. I wish they could be in person again, and they will be probably next year. But in the meantime, we have to work with the tools that we have. So thank you for participating in this, but don't let it stop here.
Amen. Pat and I usually find things to disagree with, but I think the risks are such that it would be hard for us to find much to disagree about.
Yeah, but let me put
there.
for NAFA members who are thinking, what do I do with this information? What do I say to my clients? Clearly, there's going to be a lot of client reviews happening in the next little bit if any of these proposals actually move forward. And we're back to Scott's comments at the top, whether or not there's a process for that to work. But Pat's colleague, Tim Hanford, his recommendation is with clients, don't do anything irrevocable and don't panic. So while we're talking about the need to reach out to members of Congress and educate them in terms of what you're doing with your clients and prospects, educate yourself and be prepared. But don't panic. And Tim says, don't do anything irrevocable. It could change.
And probably will. Just about guaranteed will.
Yeah.
The problem is we don't know what it'll change to.
Yeah. So before we close out, anybody have any comments on anything? I'm going to echo what Danny said. We're really hopeful that this Secure 2.0 retirement package is bipartisan and can move and not be the process and the politics that we've been talking about. Anybody else have any comments on any issue before we wrap? No, hearing none. Thank you all so much. I have the pleasure of working with you on an almost daily basis. It would be hard for me to describe just how helpful and influential and important you are to NAFA's advocacy efforts. In the grassroots and the political action committee and NAFA staff are one thing. You guys are at another level, and we're very appreciative of what you do on behalf of NAFA members and the industry. So I just want to be able, Scott, do you have something?
That was my alarm for my next meeting. I was just.
Oh, I see.
It's a privilege to serve. It really is. I know all three of us feel that way.
Amen.
And you're all just a pleasure to work with. And so I think that this discussion, particularly the closing comments, has reconfirmed that NAIFA members' involvement in advocacy and grassroots is more important than ever. And members of Congress rely on us as NAIFA members to educate them. And so now we're going to close by listening to Congressman Darren Lahood, who says so well the importance of constituent input. Thank you all for being here.
Thank you for having us.